Shut up and sit down.
And now, streaming live from the sunny Southern California coast, this is Options Uncensored.
Hey everybody, I'm Steve. Welcome to Options Uncensored. We're making real option trades in real time together. Let's get right into it. First things first, make sure you have your brokerage account open so you can follow along. Set your YouTube video quality as high as possible. That way you can read the numbers a whole lot easier. Have a calculator on hand so you can do some easy math. If you have a question or a stock you want to go over live together, leave it in the comments section. We'll do that together. And finally, remember, this is not financial advice. This is all for entertainment purposes only. All right, happy Thursday, everybody. Let's check into our open positions. Big sell-off late in the day yesterday. That kind of helped all of our short call spreads, although the market is bouncing back slightly today. We'll probably be range-bound for the next week or so just because of the end of the year and the holiday season coming up. Will have very low volume. Our TLT position was filled yesterday at 38, I believe. Mark right now is 41. Just down very slightly. We have a T-bill auction today, so that's what this next one is. DIA down $8, essentially flat on that one. Roku up 104. Trying to make sure we stay out of the 95-100 short call area. AMD, what do we got? Down $8 as well. No worries on that one. SPY, we rolled down very slightly. Both legs are underwater, but we have 3 or so weeks till expiration. IWM, Russell 2000 down about a third of the value. We got some time. Same thing with XBI. Came back big yesterday. All right. Let's find some new opportunities, although we are coming to the end of the year, so new positions are becoming less likely until early January, okay? First up, Micron, MU. Up 6.5% today. This is a post-earnings move. Gap up and selling off already. Here's our chart. Are we at? Not at the all-time high, so didn't move that much either. Let's check out the option chain. For January expiration on the call side, if you sold the 91 and bought the 95, do some math really quick. That take 91 is 71 minus 29 divided by 2 divided by 400, 5.2 if you sold the call side. Put side, if you sold the 77 and bought the 73, 57 minus 22 divided by 2 divided by 400, worse, 4.3. So you're better off selling the call side. If we moved out to February, we're almost at that point where we're going to stop trading January and trading February. We sold the 95, bought the 100. This is perfectly priced. 96 minus 45 divided by 2 divided by 500, 5% on the nose. There's no move here. Perfectly priced, so there's no edge. Put side maybe? 72.5 and 67.5. 64 minus 28 divided by 2 divided by 500, 3.6. Now pass on this one. Close. Let's move on. Next is CarMax. Post earnings as well. KMX up 7.5%. Earnings were today before the open. So lower low here, and sorry, higher low here and lower highs here, which makes sense for the sell-off. It gapped up to 84 and it's already sold off. So the move may have already been made on this one. January on the call side, very light volume. 10-cent spread here. Same thing. Put side has a little bit more action, but not by much. Skip this one. Maybe February. Nope. Nope on the call side. No on the put side. Moving on. Carnival Cruise Line, CCL. Up 4%. This is post earnings. Okie dokie. And here's our chart. Crazy move up, crazy move down, then crazy move up again. Looks like topping out. Can't get quite past this last peak. That makes sense. On the call side, you sold 21.5 and bought 22.5, I guess. That's the move right there, but it's too tight of a spread. 23.5. 21 minus 12. Divided by 2, divided by 100. No, this is too small of a stock. Maybe February has more action on the call side. Selling 22 and buying 24. 40 minus 16. Divided by 2, divided by 200. There we go, 6%. If you sold this call spread, selling the 22 and buying 24 for February, you get 6% return, but we're 57 days till expiration, so that's a long time to go. Where's 22 on the chart? 22's up here. This seems very fairly priced. I'm not saying that's a good deal or not. Just you get paid for it. 6%. Oh, sorry. Next up, Carvana CVNA. This one's up almost 6% today. Post earnings, and this is crazy rally ever since early December. Earnings for Carvana are end of February, so that's after expiration. Call side for January. If you sold, liquidity is an issue here. You've got a 22-cent spread here on the short side. Not liquid enough. On the put side, maybe it's better. If you sold 42, sell 42 and buy 33, that's a $900 spread, but too liquid down here. 42 is liquid, that's good. Things kind of dry up around the 40. So 103 minus 78. Divided by 2, divided by 200. That's a 6.2% return there. If you sold 42 and bought 40. Where's 42 on the chart? 42 is right here. Again, fairly priced. Not crazy about it. Plus, I'd rather sell the call side. What about call side in February? Sold 85. 90 is a little close to buy, but that would be the trade. Liquidity's 20 cent here. Horrible. Almost. Nah, can't do this. Almost 50 cents here. Let's move on. Boeing. Let me guess. Up again? Yes. But it looks like Boeing may be topping out here. Earnings are January 24th, so that's after January expiration. We were in our Boeing short call spread that got ran over in December. Closed it for a loss, but we're trying to get back in. Maybe now's the time. Selling the call side for January because I don't want to be part of earnings. If we sold 285 and bought 290, no, don't know if you're gonna get paid for it. 167 minus 116 divided by 2 divided by 500, only 5% there. February. Actually, at this point, I wouldn't trade February. I'd wait till after earnings at the end of January. But at that point, the move could already have been made. So it's kind of in this wonko zone where you can't really sell January because you don't get paid for it. February's after earnings. You don't want to be part of earnings. It's at the point where it could get a pullback. Let's move on. CRM. Upgrade, downgrade, upgrade, downgrade. Upgraded yesterday. Sorry, downgraded yesterday and upgraded today. So we got this whipsaw action of upgrades and downgrades. Earnings are in March. Big gap up. A little bit of follow through here. Where are we in the chart? Resistance here. That makes sense. Next resistance is 282. What's the call side look like? 282.5 for the call side in January. And 287.5 on the longer leg. What do you get? 169 minus 106 divided by 2 divided by 500. Hold on, I messed it up. 164 minus 105 divided by 2 divided by 500. 5.9, almost 6% there. 282.5. Is right up here. This one's tempting. It's already sold off a bunch. $282.5. Interesting. Call side for February. Still no earnings on this one. Sell 290 by 300. 253 minus 131 divided by 2, 6.1% there as well. It's $1,000 spread though. 290, 282. I think this one's interesting. We'll come back later. Next up is Spotify, SPOT. Up 2.5% today. I'm trying to remember what the news was. Spotify upgraded to buy at Pivotal. Earnings are at the end of January. Put side for January if you sold the... Nah, not enough volume on the put side. Call side. Selling 210. Same thing, 20-cent spread here. 15-cent spread here. No bueno. Some selling going on. Someone was selling 200 and buying the 210. That's interesting. Getting ready for earnings. All right, next. Tesla. Kathy Woods. Okay, good for her. Sorry. Earnings are January 24th. Keep that in mind. Here's our chart. Still in no man's land. This downward channel may bring some downside. call side then. If you sold for January, sold the 282.5. No, take it out. Do the sell the 280 and buy the 285. It's awfully close though. 370 minus 295 divided by 2 divided by 500, 7.5% there. 280 on the chart. Where's that? Awfully close, that's why. I don't know. I'd rather wait till after earnings on this one. Close. Very close. Not enough volatility. Moving on. BROS. A little bit of volatility here. Top restaurant picks. Okay. Up 3.5% because of it. Okay. Not a lot of volume here, though. Put side, no volume. Call side, a little bit of volume here, but not enough to make it worth it. Too illiquid. Same thing with February. Not enough volume here on the put side. Call side, slight volume, but we can find better. TLT, let's check into the TLT. Opened this position yesterday. We did what, a January? Yeah, sold the 103 and bought the 106. Today, open, sell the 104, buy the 107. It's 49 minus, actually, yeah, sure. 19 divided by 2 divided by 300. Only 5% there. 15. We're trying to get 19. The volatility's kind of come out of this one. I could tell just by looking at the spread. You'd have to actually sell the 104 by the 106. 49 minus 25 divided by 2 divided by 200. There's your 6%. We're trying to get 19 for 3. That's 6.3. Still, the trade I made yesterday is better than opening one today. So you could, I would, if I had to, sell 104 buy 106, but I'm happy with my trade. Here's our chart. Coming back a little bit today. Like I said, we're hitting the 200 day. We got this downward trend ceiling here. Lower high, lower high, lower high the whole way down. And then we should have resistance around 100, 101 for sure, which is kind of where we're at. So interesting. Not expecting a big pullback, just a very slight one before resumption higher. I think, this is my own opinion, obviously I don't know for sure, but I think this was the bottom for the cycle back in October. Okay. Affirm. Up 6%. So down big yesterday, up 6% today in the stratosphere. I check out the call side for today. Earnings are February. So stick with January on this one. Don't go to February. If you sold 61 and bought 67, that's a $600 wide spread. 164 minus 105 divided by 2 divided by 600, 5%. I wouldn't do that. Put side, probably get paid more then. Maybe not. Sell 36, buy 30. Same thing, $600 wide spread. 72 minus 23 divided by 2 divided by 600, 4% there. So fairly priced on both sides, and there's really no edge. Moving on. Etsy. Trying to look for Etsy at 100. Not there yet. We can probably move on. End of February are earnings. Call side though, on Etsy, if you sold the 95, bought the 100. Okay liquidity. You see how volume cuts off right after 100. There's nothing down here. Some volume here, some open interest. But things really fall off a cliff post 100. Actually, post 110. 95, 100. So that's 131 minus 68 divided by 2 divided by 500. 6.3% there. Interesting. I'll wait. Gold. I think gold's up today. Slightly. Volatility still high. At all-time high, sell off, and then a big rally back. Maybe the put side on this one. That's right. You don't get paid for the put side. You get paid on the call side. But I'd rather wait for an all-time high again to sell the call side. If you sold 183 and bought 179, it's $400 spread. 42 minus 14 divided by 2 divided by 400, 3.5. Call size where you get paid, but I don't know if I'd want to take the call side right now. Selling 196 and buying 199. 89 minus 52 divided by 2 divided by 300, 6.1% there. Where's 196 on the chart? Right up here. You gotta remember this is January expiration. Skip for now. Wait for an all-time high, then sell the call side. Newmont, looking for 44. Getting closer. Earnings for Newmont are February 22nd. Same thing with this one. I'd rather wait for it to get close to 44 in the new year than open something, okay? FDX is a follow-up from yesterday. Earnings now aren't until March. So we had big gap down yesterday, rallied up. This whole bar was green during the show, and then this late day sell-off brought everything back down to the 200-day. Getting down there again. Would be nice to have a short put spread on my repertoire, considering everything's short call spreads. Put side for, well, we'll look at January and February. If you sold 230 and bought 225, 137 minus 84 divided by 2 divided by 500, 5.3 there. That's 230. 230 on the chart is right about here. That seems very fair. February. Selling 220 and buying 210. That's $1,000 spread. Does it beat 5.3? 163 minus 82 divided by 2. That's only a 4%. So, selling 230, buying 225. Liquidity's okay. It's not great, but it's okay. 9 cents spread here. 8 cents spread here. Slightly illiquid, but not bad. We'll look at that one. Come back at the end of the show, see where we're at. Okay, KRE, looking to get to 56. Not there yet. Getting close, though. I'd rather wait for one more leg up and then sell a call spread. Getting very close, though. Hold on this one as well. All right. What time are we at? 7:40. Let's go to our IV ring scanner. We'll sort by volume. VIX is up a lot yesterday, so that should help with some of these. That's right. So we got the SPY. Actually has some volatility in now, 32. The IWM's at 74. Let's look at the SPY. We have our short call spread that we rolled over open, waiting for a pullback down here. Here are our strikes in the money. If you want to open something today for January, I would sell the 487. Yeah, buy 492. 142 minus 74 divided by 2 divided by 500. 6.8% there. Wow. What am I trying to get? 35? I'm trying to get the same thing. 35. Okay. That's interesting. If I didn't have a position open today, I would do that one. 486 on the chart. That's up here. That would be an all-time high, so that's important to know. And these are very easy to roll, very easy to get in and out of, so you don't have to worry about any of that. Let's look at the IWM. We are short the 197 and long the 200, so we're right at our strikes. Okay. Call side, if you want to sell the call side today. For January, sell the 210. Yeah, buy the 215. 210, 215. That's 135 minus 71 divided by 2 divided by 500. 6.4%. That's nice. Put side. I don't know if I'd want to sell the put side. Do you get paid more than 6.4%? Selling 186, buying 181. 104 minus 62 divided by 2 divided by 500. 4.2. So we still have call skew and all these averages. You get paid more to sell the call side. The risk right now after such a move, the risk is now to the downside, and you would be selling puts then, and you only get paid 4% to do it, so you're getting less reward to take more risk. That's backwards. Moving back to the list, HYG, stick to TLT. Marathon, Affirm, we already looked at that one. Oh, we have Nike soon. Is Nike today? Boeing, checked out Boeing already. Coinbase, I wish I could trade Coinbase, but it's too illiquid. Bank of America, we've got earnings in the banks coming up in mid-January. That's about 3 weeks or 4 weeks away. Warner Brothers Discovery, they were in the news about trying to merge with Paramount, but I don't think it's happening. Robinhood, skip. FedEx, we already looked at. Maybe. GDX, stick to GLD, but not yet. XBI, we have our position open. Let's take a look at it. What are we? Short the 85. Short the 85, so we're both spreads out of the money, and we bought the 90. If I had opened up something today, I would sell the 92 and buy the 96. $400 spread. 74 minus 34 divided by 2 divided by 400, 5% on the nose. Only you don't get paid for it. I'm trying to get 27 for 500. It's 5.4. It's okay. Upstart, no thank you. PayPal. Pfizer. Nike today after the close. We'll follow up tomorrow. FXI. All right, let's go back to FedEx. We were looking at the 230, 225. This one makes me nervous. I'll do the math one more time on this one. What concerns me on this one is if it moves against me and we've only got 29 days till expiration, it's not gonna be very hard to roll, it's gonna be annoying to roll. February, you just don't get paid for it. Let's go ahead and do it. 230, 225, put spread. Go to verticals. What is this? Oh. Set the width to 5. 230, 235. Was that the spread? Hold on. Selling 230, buying 225. 230, 225. This one right here. $65 divided by 500. 65 divided by 2 divided by 500. 6.5%. We got a 16-cent spread here. That's what's concerning. All right, we'll do it. So we're gonna sell one January 230 put, and we're gonna buy one January 225 put. Actually, we'll go for 70 now. I saw it. Change this to 70. Receive a credit of 70 cents. $70. Preview this. Double check the ticket. Sell one January 230 put to open. Buy one January 225 put to open. This is a $500 spread. Receive a credit of 70. We'll go ahead and send that one out. I'll hang out here. If this gets filled today, set a buy to close. Good till canceled at 35 cents. Okay? I'll hang tight all day. If this continues to move down, odds are it will get filled. Hoping for a bounce at the 200-day or slightly below. If not, there could be a good bounce around here at 233. Okay? And we're selling the 230, so that's out of that range. This one will be fun. This one's going to be a nail biter. If the market continues to sell off, FedEx is going to go down with it. So just keep that in mind. You know, we're very short call spread in anticipation of a market sell-off come early January. So if FedEx is part of that, it'll go down with it. So buyer beware on this one. Cool. This will be fun. All right, thanks for watching, everybody. That'll do it for today. Tune in every morning, 7:15 a.m. on the West Coast, 10:15 a.m. on the East Coast. We go live every morning trading options. All right, tell your friends to tune in as well. See everybody tomorrow morning.